kinds of information, and we need to know what to trust. We're going to talk about forbearance. We know about the coronavirus, the COVID-19. There's a lot going on out there. A lot of people are late on their mortgages because they're out of jobs. And so we're going to talk about the benefits, that the COVID-19 has, in as much as it's COVID-19, but there's still lots of benefits if you're out of job and you have a home and you're not able to pay. Hey, Marquisa is going to tell you what you can do. We're going to talk about, what realtors can do to help. So, are you ready?
Ready.
All right.
Say hi, Danielle. Hi, Justina. Hi, Sonia. This is so cool. Hi, everybody's popping up. Hi, everybody. Happy Saturday.
It's a lot of people. Hey, Anna, thank you for joining. We appreciate you for joining. So we are going to go ahead and get started with the question. So, Marquisa, tell us who you are and what you do. Tell us all about what you do on your buyer.
Okay, so I am a loan officer with Tidewater Mortgage, okay?
Okay.
I love doing it because it's not just about mortgages. It's about your everyday life. It's about your financial portfolio. It's life. Okay. Whether you experience good, bad, we're all in it together, and we do our best to get it together, and it's about being positive. COVID-19 is something that has impacted us all, whether it's emotionally, physically, or financially, and coming and being in the mortgage industry, you find that through experiences, a lot of people just need encouragement right now. A lot of people just need encouragement because finances play a big part in our everyday life. They affect our emotions. They affect our health. They affect everything, and you can only fake it for so long. You know what I mean? This has gone on long enough where even if you are in a good financial position today, you still may have a little anxiety on what am I doing, or what is it going to look like next, or what do I do to keep hanging in here? All that, it's unbelievable. It does tie into the mortgage industry. It really does. Because purchasing a home or an investment property is going to be one of the biggest price ticket items that you ever purchase. So it's going to be something you revisit whether you're a first-time home buyer or you already own a home and you're looking to sell that home right now. Side of the side you're on.
Right. Awesome. Thank you for sharing. And I'm Jemimah Chuks. If you're just joining us on this live video, I'm a realtor here, licensed realtor here in Delaware, and I cover the entire Delaware. And we have here Marquisa Edmond. She's, she has a very good, outstanding history on underwriting, as well as she's a loan officer, and she just helps you get qualified. So I also find the house, and she gives you the money. How about that? Today we're going to talk about credit. So, Marquisa, can you share with us? I meet a lot of clients. They, some of the issues they have is good credit. Credit is a big problem here with all these credit cards out there. And, when the banks give you Capital One gives you free credit, you think it's money. So how can we get our credits right? And what are you guys expecting from clients out there trying to get a home?
Okay. Credit is your purchasing power, everyone. Regardless of whether you're buying a home or not, it is your purchasing power. We have to hold on to our purchasing power right now. It determines what type of interest rate you're going to get on your credit card. It determines what type of rate you're going to get on that car that you take off of the lot. And it definitely determines your interest rate on your mortgage, okay? Credit is kind of a touchy thing right now because some people have been really impacted by COVID-19. Retail stores that have closed down, okay? Other industries that have really just had to reduce their hours. How do you hold on to credit during this time? I want to talk about a couple things, if that's okay, Jemimah.
Oh, sure.
Okay. All right. Between a 620 credit score used to be, or typically is, the norm to get you over the hump to being eligible to purchase a home. You wanted to be around 620, okay? A lot of guidelines you would hear, okay, you could do lower than a 620, but you really don't want to live in that world, okay? It was you really wanted to at least make it to a 620, okay?
Right.
Lenders right now are having to tighten up Okay, a lot of them on looking at how they see your credit scores in that 620 and wanting a little bit more to reduce the risk factors that are going on right now with unemployment. Unemployment changing daily. We're currently at 26.5 million workers that have filed jobless claims. That's
applications.
Big. Yeah, that's a lot. A lot of those.
Oh, wow.
26.5 million is high.
That is a lot.
Yeah, but we're going to be positive about it because
that's right.
There's always a bright side to the end. Nothing lasts forever. You know.
That's right.
Change, summer coming, so we're going to still stay positive about it. But those are the facts. That's the truth. Mortgage lenders know this. We are seeing where some clients have reduced hours. It's not their fault.
Okay.
We're still trying to qualify them based on reduced hours. Okay.
Okay.
Some clients may not be working right now, but are receiving unemployment. Okay. If you're receiving unemployment, you got to really think. Do I really want to take and put myself in a position of getting a mortgage right now? Okay. Or do I want to stay in the game and just hold on and keep in contact with my realtor, my lender, and ride the storm? We're here for you. Your realtor's here for you. Jemimah's here for you the whole way. We're in it together.
Yep.
Yeah. So we're still pushing through. You want to keep your credit scores up by doing certain things. Revolving accounts such as your credit cards are where you're going to get the most points to your credit score. Okay. If you can try to keep your credit balances below a certain amount based on your credit limit. So if your credit limit is $500 on your credit card, you want to keep a balance on there of about $18 to $28 a month. Okay.
Wow.
Those points, which means you'll hold on to your purchasing power. If you're in a position that you've had to use those credit cards during this time to make purchases that you may not have used it for, don't get discouraged, okay? Don't get discouraged. Check your budget. Follow a budget. Make a budget for yourself every month.
That's important.
It is. Where you may not have the income you had before, you're still not having the expenditures you've had before. I know for right now, I'm not eating out during the week. Okay?
Yeah.
I'm saving $40 not going to the Waffle House every week, okay?
I know, right?
But I have noticed that when I look online at my bank account, I have less debit transactions right now.
Wow.
Okay, now if you're shopping online, that means that you have the means to shop online. Sit down and take a serious look at your budget on how to cut costs. Can you reduce your car insurance right now? That's probably going to be tied into that credit score purchasing power as well.
Right.
Where can you cut costs? And I'm pretty sure you've already thought about this, but don't give up. Keep looking at it. Installment loans. Are you in a position where you've had your car for a long enough time where you have equity in it where you can refinance? The reason why I say that is because banks, credit unions, if you go online and check out their websites, they are offering better deals on some of their incentives for installment loans, auto loans. Please keep checking that. All right? If you need immediate cash, I don't know if I can jump right into this, Jemimah, or you want to let me?
Yeah, sure. That's why we're here.
Okay. If you need immediate cash, or if you're in a position where you're struggling to make payments such as your mortgage, if you already have a mortgage or things like that, please. Forbearance is a big word that's going around a lot right now in the mortgage industry. Please use that as your absolute last resort, okay?
Okay.
Forbearance does not mean payment forgiveness, okay? It does mean that you are going to be delayed in being required to make a payment for a certain period of time. But please call into your creditors or your lenders and check and see exactly what their guidelines are on that. Are you going to be delayed from making a mortgage payment or some other payment for 3 months, and then the full 3 months are going to be due at the end? You really need to know that, because if you don't have your monthly payment now, more than likely you're going to be in a very tough spot at the end of those 3 months when the forbearance period is up. That is what a balloon payment means. You don't have that payment today, you don't have it tomorrow, but it's going to be due at a certain period of time, and it's going to be due in full. The only way to really know that and be informed on that is by contacting your creditors, your lenders, and finding exactly what their terms are. Okay? The reason why I want to point this out is because this is a part of keeping your purchasing power. Don't assume that just because we're in a pandemic that the credit bureaus will understand and not report you late. Okay? Don't assume that a late payment will be excused automatically. Some creditors are behind, and the credit bureaus, I am still seeing that they are marking 30-day late.
Wow.
Yeah, and it's tough because a 30-day late can do so much damage to your credit score.
Sure.
It's unbelievable sometimes. Okay? And you don't want that to carry over into a 60-day late or a 90-day late. That damage is very hard to undo.
Wow. Thank you so much for sharing that. Now, let's just say one more thing. First of all, thank you all for joining. I see Toby Keys. Thank you for joining. Wavy T. Thank you all for joining. Now, question for you about credit. If you guys have questions, please feel free to post your questions, ask questions. Marquisa and I are here to talk about it all, and we're going to be able to answer your questions. Talking about credit, tell us, some people, as a realtor, I meet a lot of people that have $700 credit score, and still they don't qualify. So I found out it's not really about credit score. It's not really about good job. So what is another issue that, happens when you have a good credit score and you have a good job, still you don't qualify?
Your debt to income. That's
good.
Your debt versus your income. So you can have a 700 credit score, which is awesome, because that's what lenders are looking for. The higher the credit score, the better. And why?
Right.
It's a reflection of your credit history, how you pay your obligations. But debt to income. Your debt to income are your total monthly debts, whether it is your revolving accounts, which are your credit cards, your installments, which are your auto loans or your student loans, okay?
Okay.
Divided by your gross monthly income, your income before they take out any taxes, any 401k deductions, or anything like that, okay?
Okay.
Debt to income is the other factor that determines how much of a mortgage, how much of a loan, how much of a purchase price that you can qualify for.
Okay.
So if you have a 700 credit score, however, your debt divided by your gross income exceeds the standard set by programs,
okay,
you don't qualify for enough to get a house in this market. The housing market is still alive. Purchase prices are still going up. Values are still there. So it can be tough. I will tell you one of the biggest factors right now, which is common in today, and you can't figure out, well, how are we not going to get them, is student loans. Lines for FHA, which is one of the biggest programs, USDA require that although your student loans may be deferred or you have an income-based program, and you're not making a full payment like you would be, you have to count 1% of the balance.
Right.
So if you have a $50,000 student loan and deferment, and you count 1% of that really does take your debt to income higher. The one about that is you don't get consideration for a lot of jobs without having a degree. And depending on your field, you may need another level of education. So student loans have been one where, depending on your income, your student loan can put your debt to income too high, just like that.
Oh, wow.
Yeah.
Wow, that's really terrible. I mean, it's just a big problem in America, and we're just hoping that someday education will be absolutely free. Free.
Yes.
So let's look at the go ahead.
So I don't forget this. Right now, I do want to point out that the CARE Act that the president, the CARE Act does help federally owned student loans right now.
Okay.
Federally-owned student loans, of course, are different than privately owned student loans, such as Sallie Mae. But if you have a federally owned student loan, you should have received some type of notification right now, whether they are going to put your student loans into administrative forbearance. That's wonderful.
I received that. Yeah, I can confirm that because I received that in the email.
You received one?
Yeah, I did.
Yes. So what they're doing is they're automatically stopping your payments, which is different. So we're going to talk about this. It's different. They're automatically holding off on your payments for a period of time. I think it's till September. It depends. Okay. And during that period of time, you do not pay interest. Okay. That's something that they're automatically doing. So a lot of times, if your payment was being automatically debited out of your account, they should be stopping doing that, and you don't have to pay interest, okay?
Okay.
That's different. If you have a privately owned student loan like Sallie Mae, please don't assume that your payments are going to be in forbearance. You need to contact them. Ask them, do they have any programs, and find out the exact terms. If they say, hey, okay, yes, we offer forbearance, you need to know how long you'll be in forbearance. When are your payments due? Are you paying interest on it in that period? How do they report that to the credit bureau? Stay on top of it because lenders are still reporting things late. I shouldn't say lenders, creditors are still reporting. Don't assume that you're just automatically going to be forgiven on payments right now.
There's a question here. We have Chuzi, 1981. She's asking, she's asking, what about old medical bills? You know, that's a big problem because I've had a client that had everything, but the medical bills was an issue. And she's been, you know, some of these bills, she didn't even know about them. So, you know, Chuzi is asking a very fantastic question. What do you have to say about that?
That's a very good question. Mortgage guidelines do take into consideration the nature of medical bills, okay? Guidelines do not necessarily require them to be paid to qualify for a mortgage. However, do see them as a risk factor that they're there. So if you have a $500 medical bill, okay, that was unpaid, a lender will look at that, assess the risk by saying, hey, okay, it was medical in nature, okay? All their other bills have been paid. They don't have other risk factors that are present. They have been paying their rent on time. They've been paying their revolving and installment of debt. They can excuse that medical bill, okay? Now, if you had a $30,000 medical bill, okay, the guideline is still there that medical bills are not necessarily required to be paid, but however, there is a big risk factor of a $30,000 medical bill versus a $500,000 medical bill, okay? So you have to look at how much are we talking about, how many do I have? Have I approved clients that have medical bills without them having to put all of their savings into paying that off? Yes. Okay. But if you have a $30,000 medical bill, don't assume that that's going to be excused because that is a risk factor. Okay.
Okay. Wow. Well, that's awesome. Well, yeah, Chuzi, hope we've been able to answer your questions. And guys, if you have more questions, please post the questions and we can attend to it. Let's look at, you've talked about forbearance. You know, you've talked about a lot of things. You've talked about credit score. What can realtors do to help? So as a realtor, what can we do to help our clients?
Staying positive, okay? Staying positive. You may be pulled into a position of you become someone's kind of life coach, their cheerleader, okay?
Okay.
Homeownership is almost everyone's dream. And a lot of times the mortgage lender and the realtor are not a lot of times, we are the ones that bridge that gap for that dream. Okay? We are there. So our energy and our attitude, even during something like this, really does impact the people around us. Okay? And we have to be aware of that. Should people still be putting their homes on the market to sell them? A realtor needs to sell them? Yes, because there are people that still need to buy homes. The housing market is a big part of the U.S. economy. It always has. It always will be. It does fuel our U.S. economy, whether we're in good times or bad times. So if you're someone that is unsure of whether you should sell your home, give your realtor a chance. Give Jemimah a chance. Give, realtors in your area. If you're not in Delaware, if you're not in Maryland or Jersey, whatever, give your realtors a shot. Don't just assume, I'm not going to sell my home. You might be able to give a good deal on it or get a good deal on it, and a buyer that might be the home they were looking for. If you don't give your home a shot in listing it, you'll never know. And if you don't get out there and try to buy a home right now, you may lose out on a good deal. There may be
absolutely.
Yeah, there may be someone looking to relocate and they really need to sell their home. That could be your home.
Right. And that is so true. As a realtor, I get to see, a lot of people wanting to buy a house, a lot of people, so if you want to list, you're thinking about listing, now is the awesome time to list because, with me, I can assure you that, I can sell your house within a month because we have a lot of buyers, looking for a house here in Delaware. And if you're a buyer and you want to buy a house, hey, you can count on me to get you the best house. There are lots of new model houses and you'll be shocked what you can qualify for. So I'm so glad. One of the reasons why I have Marquisa on here is a lot of people I get to meet have so many questions, and I just thought that Marquisa coming in here, it would be awesome for her to answer these questions. And so I'm always here for you. If you're a buyer and you're a seller and you want to buy, your dream home, hey, let's talk about it because I believe in your vision. Marquisa believes in your vision, and we are here to make it a reality. I have another question here, and the Kenisha says, if your federal student loan on forbearance due to COVID-19, would you still suggest making your monthly payments, or would you save those dollars? So
that's a very good question. So what I would do if I were you, because I have done this myself, is call your student loan servicer and verify the forbearance period. Get information, and to be honest with you, a lot of them are tied up on calls, so it may be hard to get through, If you have not received some type of notification from them outlining the terms of the forbearance, please call just to make sure before you do not make payments on your student loans that they are truly in a forbearance that's that's honored by them. But if you receive notification that they are honoring a forbearance for you, yes, take advantage of it in your monthly budget, and take advantage of not having to make that payment for the period that they have set. Now, I'm saying this because I know personally I received the email for one of my federally student-owned loans, and they outlined and they mapped out everything. I was like, okay, they've covered everything that I could possibly think of, because I want purchasing power. So I am going to take advantage of this forbearance period because they automatically stop my auto debits. They automatically put this in place, and they will automatically resume those payments when they're due. If that is not the case, your student loans, your providers have been quiet. You haven't heard from them, You haven't received any notifications yet. Don't assume that, I'm just going to be in forbearance. Get on the phone and speak with them. And if you need to put yourself in a forbearance, make sure you understand all of the terms, When it starts, when it ends.
Wow, that's awesome. Wow, thank you so much. I get to meet a lot of people. I mean, if you're on here, that's awesome. I get to meet a lot of my clients as a realtor. They have everything going on, but their jobs, they have a good job. But the fact that they've not been on the same job for 2 years. So why does that scare lenders?
Okay, so lenders want to look at consistency when it comes to your job employment. Stability and dependability. I can't say that word today on Saturday. I'm sorry. I'm just going to be consistent. They want to be consistent. You don't have to be at the same job for 2 years, The guideline is that you must have a 2-year history of employment. You can't just start. You have to have a 2-year history of employment, If you change jobs, lenders are looking at, is the job in the same line of work that you've recently Did I go from being an apprentice in the plumbing field to now I'm out on my own? Did I change jobs for an advancement in my salary? Okay. Why did you change jobs, and how many times have you changed, and why have you changed? If you're looking at changing jobs for advancement, it's understandable. If you're hopping around in different fields and you haven't quite found your way yet, that is a risk factor, because that mortgage payment is due every month, regardless of whether you're in between jobs or you're looking for advancement. That mortgage payment is due. Okay. The other thing is, you want to look out for gaps in between employment. So say, for instance, I just got out of college, I got my first job, and I'm like, this isn't really my, this really isn't my cup of tea, but I want to move on to another job. Please stay in that job the best you can. Give your best effort. Be dedicated all the way till the end until you find another job. You have an official offer letter with an official start date. That way there isn't a big gap of employment. Right. You look at gaps of employment. 30 days is understandable, okay? 60 days is understandable. 6 months, okay, guidelines typically change.
Okay. Wow. Thank you so much. You've just shared a lot of information. That's really awesome. Guys, if you have more questions, feel free to post. In the meantime, I want us to talk about where do we go from here. A lot of things have changed. We all know that the COVID-19 has really impacted families one way or the other. And if you're watching me and you've lost a loved one, we are shouting out to you. We're praying for you. We're sending you love from our hearts. Sending you love. We love you, and stay strong out there. Stay safe. Wash your hands. Obey the CDC rules. It's really amazing. And what I have to say to you today is the fact that COVID-19 has impacted, yes. But guess what? There's a new normal. How do you prepare for the new normal? We have to stay positive and realize that, hey, life has to go on regardless of what's going on. And this time while you're home, it's the best time for you to prepare. It's the best time for you to write the vision board down, for you to write, your mission and strategies on how to, be better to enhance your business or, your job, how to just empower yourself. It's the best time to read books, lots of books, and watch lots of inspirational videos. I know the news is always out there. It's important to listen to news, but at the same time, because of your mental health, you want to listen to more positivity than a lot of all this stuff going on that scares people. This is a time for you to plan about buying a home. What do you need? And this is the reason why we're having this live video. I am a Christian, to let you know that if you have a vision 2020 of buying a property, it's possible. This is just April. It's very much possible regardless of the COVID-19. I must tell you, lots of people are still closing their properties. They're closing on their properties yesterday, today, every day, regardless of COVID-19. So don't allow COVID-19 to put your life on a standstill. It's not your fault. It's nobody's fault. It's a pandemic. It's not something we could have controlled. Of course, there are political mistakes that has happened, but hey, this is your life. Everyone is counting on you. Your family, they're looking up to you. Your children, so you can still buy these properties that you want to achieve. So what you need is a good credit. Marquisa has shared the things that you need, and if you didn't tune in early, you can log on back to watch this after this live video. You can feel free to contact me, Jemimah Chuks, at Jemimah Chuks, and you can contact Marquisa, and she's an excellent loan officer, and she can help you. One of the things I like about Marquisa is just her positivity, her energy, and willingness to help you regardless of bad credit or not. So if your credit is really bad right now, guess what? Standing still and not doing anything about it does not help you. So if you have a dream and you want to buy a home, so the first thing to do is to work on that credit. And guess what? You might say, hey, Credit Karma says my credit score is this. I am not, talking against Credit Karma, but what I want you to know is you need to talk to a professional like contacting me or Marquisa, and we can walk you through. Marquisa will walk you through how to get your credit right. And it's scary. Sometimes people say, "Oh, I don't have money to pay for credit repair," but it's not just about paying them. There are some certain things that you will need to do for your credit to get better that would not require someone working on your credit. It might just be paying off some little stuff that is that can give you as much as 50 points, 100 points. That's a huge jump. It could just be, yes, you know what I mean? Yeah. It could just be like a light bill, or internet, or it could just be a phone bill that you switch from Verizon to AT&T, and then, Verizon reported you. And it could just be as low as a TV bill. You know what I mean? And you could just pay, it could just be $200, $150, keeping you from buying that property. And
we can tell you what would boost your scores too. We can always tell you, hey, let's work on this, or let's work on that. And I can tell you how many points your scores will go up. It all depends on how motivated you are and ready to do it. But we could do it. We do it all the time. A lot of my clients I've been working with for months on their credit. And I feel so proud of them when we get those, we make it to the finish line. We're at the closing table because it wasn't easy. But I know they're going to keep their house because they worked for it. They put in the effort for it. It meant a lot to them. And all that to say, great things come out of adversity. You come out strong. Right. So if you're in a position where your credit is not as strong as you would think or hope it to be, still give it a shot. Let's talk about it. Let's try. I will let you know this. A lot of folks do have Credit Karma or Credit Wise or something else that's telling you what your credit scores are. Those consumer reporting agencies, they're great because they kind of give you a range of where your credit scores are, but they are not your true FICO scores. Your true FICO scores can range anywhere from 20 to 50 points. And a lot of times people are surprised at how much lower their true scores really are. That's because they're not your true FICO scores. That doesn't mean, hey, don't use them. Just know that whatever they're reporting to you, your scores may differ, okay? MyFICOscore.com is a more accurate tool to use to see what your actual FICO scores are. Because when mortgage lenders pull your credit from the three bureaus, Experian, TransUnion, and Equifax, those are your true FICO scores used to qualify you to purchase a home. So I have some clients say, for instance, they just bought a car before they got to me. And they have an idea of what their credit score is because that's the score they were told when they purchased the car. That is not the actual score that is going to be used to qualify you to purchase your home, okay? There's three bureaus. There's always going to be a lower, a middle, and a higher score. Your true FICO scores are what count. There were a couple other questions that came in, Jemimah. I've got them in my head. Can I answer those for if there's... Okay, go ahead. Okay. One was, and I hope she was there because she had a really pretty little thing there. I hope you're still over there, but this was your question. Your answer is, if your student loans are in forbearance right now due to the CARE Act, okay? Do lenders are lenders still required to count 1% in your debt to income? Yes, they are for the program guidelines. So if you are getting an FHA or a USDA mortgage, and I don't want to scare you with all that kind of stuff, their guidelines do require 1% of the student loan balance to be counted regardless. Because that mortgage is for 30 years. When that forbearance is lifted, that mortgage is still going to be there. Lenders want to make sure you can afford both, okay? Conventional mortgages have different guidelines. They will allow your income-based monthly payment or the payment that you verify with your student loan provider to be counted in your debt to income when those payments kick in. So conventional guidelines are different. Good mortgage lenders try to fit you in the best program based on, one, your credit scores, your debt to income, and sometimes even depending where you're at, because USDA is only eligible in rural areas. But it's one of the best programs because there's no down payment, which means your realtor can really fight to get you a seller credit, get the seller to help pay whatever they're willing to pay, of
Right.
closing costs. There's no down payment, and that leaves you with minimal costs. Okay. The other question that popped up was, what would be the appropriate down payment I would need to make on a purchase of a home for $300,000 per se, was the question. Your down payment is based on which program you're qualified for, okay? So the most common program is FHA, okay? FHA requires a 3.5% down payment. Okay, that is the down payment required, and then you also must make pay your closing costs. 2 parts: your down payment, your closing costs. What are your closing costs? Your closing costs are the taxes, the insurance, the attorney fees, everything that it takes to get that mortgage running under you as the new homeowner. Okay, that's where it can be costly in purchasing a home, but that's why I say, don't be afraid to try. Your realtor. Friend Jemimah, she goes to bat on getting your closing costs help from sellers. There are also down payment assistance programs, but please remember, down payment assistance programs are income restricted. Delaware State Housing Authority, kissyourlandlord goodbye.com. Goodbye. Okay. I love getting their assistance for clients, okay? I would say maybe 4 out of every 7 clients I help get a home, I'm using that assistance. It helps with closing costs, down payments. However, though, right now, due to COVID-19, there are, I would say, the restrictions. They have tightened up on some of the requirements. You must have a higher credit score to get debt to income. That is the reality of it, but we're still here pushing. And at Tidewater Mortgage, you got a partner. We help you get your credit scores to where they need to be to qualify, because a lot of clients, we need that assistance, okay? The advantage of being a first-time home buyer is that you may possibly get a discount on your transfer taxes, which is a part of your closing costs when you purchase a home. Do you have to be a first-time home buyer to get housing or down payment assistance? No, you do not. You do not have to be a first-time home buyer for a lot of down payment assistance. This is why your lender is plays a big role in how your mortgage is structured to get you in there, okay? The other thing I wanted to point out, I forgot. These things are rolling up. Is it okay if there's so much information, good information, exciting, Jemimah, we could be here all day, okay? But let me just say I love to help everybody I can. Can I tell people how they can reach me to get
yes, please.
So Instagram, I love Instagram. I'm at Mortgages with Marquisa. You can DM me, you can reach me anytime. And of course, we're on Jemimah's page. You can reach her anytime, because Jemimah, I'm sorry.
Yeah.
She texted me last night. What time did you text me last night?
1 a.m.
1 a.m. 1 a.m. on a Friday night. We're talking about mortgages and real estate, okay? That's what you need when you want someone that's getting you in your home. We're your partner for life, okay? 1 a.m., all right? And I think you've texted me before after midnight. I think so, but at Mortgages with Marquisa on Instagram, and then on Facebook you can find me under Marquisa Edmond. But I am with Tidewater Mortgage. The advantage of us is that you get us around the clock. We're here. It's not about a transaction. This is your life, and this is this is a time where a lot of people where it started off positive, they're running on fumes now. A lot of people that are encouraged, they want someone to lean on. Because when this is over, you're still going to need a home. You're still going to have that dream. And dreams can be nagging when you don't fulfill them. They can. The other thing I want to point out is, if you're on here and you are a homeowner, okay? Because a lot of times, I just want to give a shout out to my current homeowners, because we focus a lot on first-time home buyers, and I get that. But if you're a homeowner, please check on refinancing your home right now. Can you get a better rate, which will free up some cash? Can you use it in your home right now? Because all my first-time home buyers, this is what you're going to want to do when you get your investment. When you put up equity in your home and the value is there, times like this, you can tap into your investment to pay yourself back. You can get a cash out finance. You can also use that to put your children through college, okay? There are some really good rates right now on refinancing. Again, that is still based on your credit score, okay? Okay. The purchasing power, you can never run from that. We've got to get it to where it needs to be. But refinancing, getting a cash out right now is an awesome thing to do when the good rates are there. Right now, I had a client that I just locked in the other day. Of course, their credit scores were like a 740 now, and I don't want you to run from that. You can get you there. I know that's high. But the low threes are possible right now, even with COVID-19. There are options. Absolutely. Yes. Yeah. I do want to point out too, Jemimah, before you consider, running up credit cards and things like that, for us folks that do and have started and have 401ks, please reach out to your 401k, your retirement plans, and just see if that would be an option for you to take a loan from your 401k because you're paying yourself back. Now, I am not advising you to take a 401k loan. However, at this time, if you check on the terms and you look at your financial snapshot, meaning when do you plan to retire, what does your track look like? Because everybody is case by case. What works for one person does not work for the other. That's why right now you can't tell one person to do something across the board. You've really got to take the time and look at everybody individually. But a 401k loan, you pay yourself back at an interest rate, which you're paying yourself back at. A 401k loan does not have to be counted in your debt-to-income ratios. This is why I get excited about this, because if you go take an installment loan or charge up your credit cards, that is counted in your debt-to-income ratio when you purchase a home. A 401k loan, if you have worked hard, and depending on how the market, how you've weathered during the market, if that is an option to you, once you research it, it does not have to be counted in your debt-to-income, which is great. I don't think most people realize that. Okay. Wow, that's a lot of information. You can reach us at, if you want to contact Marquisa, can you give us your number again? On here, Marquisa? Your number, 302. Sorry, guys. 302-824-8587. Okay, 8587. I'm trying to type it here. And give me 1 minute. Let me put it on at Marquisa. Mortgages with Marquisa. So this is her number. I just posted that. Feel free to contact. Is that correct? 824-485-87. Yes. Okay. So feel free to contact her. If you wanna reach me as a realtor, feel free to contact me at 302-359-8337. 359-8337. I get you qualified, get you the best house in Delaware, and Marquisa gives you the money. How about that? So, she gives you the money, and I give you the house. I take you around Kent County, Sussex County, Newark, wherever you want to leave, Middletown, all over the beach areas. I send you lots of listings, and we show. I know the COVID-19. I do a lot of virtual open houses, and then once Marquisa gets you qualified, and we have an amount, and we know you're ready to go, I can take you to the property that you want to buy. So this is a good time to purchase a home, and this is an awesome time to list your property if you're already a homeowner and you want to sell.
Trust me, look, this is an amazing time, and you can get, the exact money that you're looking for, if not more, at this season, because we have a lot of buyers and, loads of buyers out there. So if you want to list, feel free to contact me at 302-359-8337. And if you want to buy, I tell you this, credit is your power. Credit is your power. Credit is your purchasing, your bargaining power. So you're able to negotiate, you're able to, stand tall on the table once you have a good credit. Don't go about spending stuff. Don't go about just, using up those credit cards the way you like. Earlier, Marquisa had given us an idea on how to use your credit cards and, credit opportunities. Whatever you can do, like I said earlier, if you have a dream and a vision of owning a home this year, you can still achieve that because you have to start now. And that's the reason why you need to give us a call, give me a call, give Marquisa a call. We can help you get started, because if you start now in April, you'll be shocked by October, November. You'll be ready, correct?
You'll be ready. Yeah. So
exactly. So it just, it's something that you have to start. It's not something that you want to buy a house today and you say, hey, by next month I want to close. It doesn't work that way. But we just have to get you started on the process, and, hopefully, you fly past whatever is stopping you. So we're super excited, and we want to say thank you guys for joining us. I hope you've got value. Someone said, what are good credit boosters? Execute credit card. You want to answer that real quick?
We'll answer that real quick for you. Yes, getting a secure credit card does help, okay? And everybody, I'm sure you know by now, a secure credit card is, say, for instance, you go to your bank, you've been banking with PNC Bank, okay? You go and you ask them for a secure credit card. What they'll do is, if they approve you up to a $300 credit limit or a $500 credit limit, they will put aside $300 or $500, whatever your credit limit is, and a CD, for instance. And you will make payments on that credit card, but should you ever be late or default on it, they will take the money from your CD to meet that obligation. But it is a good way to build your credit. Nothing happens overnight, so you at least want to have 90 days with this secure card. So if your credit limit is $300, okay, you want to keep like $18 on it every single month to build that credit history. The credit bureau typically is 30 days behind. So you got to can happen overnight. They're 30 days behind. They won't start catching your payment history until, you're about 60 days out. That builds your credit. If you can right now pay your revolving accounts down that you do have, that will boost your credit, okay? There are all kinds of different tips that can boost your credit. A lot of times it's case by case. So depending on your history, doing one thing for one person isn't going to work the same. I have a lot of married couples that have joint credit, but I have to look at them individually. So you can reach out, and if you want to apply and get yourself ready, I'll definitely look at your credit history to tell you what you need to do for your purchasing power. Yes.
Okay, so that's awesome. We've been here for a little over an hour, and we are super excited. If you have more questions, please contact me, contact Marquisa, and if you contact me, of course, I will, work you through the process, and we will contact Marquisa and work you, both of us will work with you until you get to the table. And that's one thing we're assuring you. With me and Marquisa, you get all the information that you need, and when you're buying a home, you know what you're doing. You're doing it for yourself, well informed. You're not just doing things blindly. That's the advantage of having professionals like us. So we want to thank you. I'm gonna be doing a couple of lives with different people, and Marquisa as well, to give you the information about purchasing your home. Remember, your Vision 2020. It cannot be left alone sleeping. You just have to activate it. You just need to start now. And if you need help, we're here to help you. So I want to say thank you, girl, Marquisa.
All right, enjoy your Saturday.
Thank you. You want to say something encouraging to the people?
Let's keep going. We're coming. Hey, this is what life's about. And let's keep going. Stay stay positive. Do not run out of hope. Hope is free. It's just hard to hold on to, but it's a choice, okay? So please, please stay hopeful. I mean, look, someone has a screen name, Who's a Sweet Potato? That is so cool. I mean, you gotta smile. You gotta be encouraged about something. You gotta have faith in something. Don't give up, okay? Because we don't, regardless, we don't get this time back. We don't get today back. I can't wait to go to the Waffle House again, but in the meantime, I can't get today back, so we're going to get through it. But thank you for inviting me.
Thank you so much. Let me do a screenshot and see if I can get anything. Okay, well, let me do a screenshot.
Let me do a screenshot, too. All right, y'all. Take care.
Okay, so someone is saying to save it. Yeah, we're going to save it. We love you guys. I love you, Marquisa. Stay safe.
Bye.
Bye.